All right. So tell me the parameters to check before you take a trade on the Manara scalping scanner. Now you can
Okay,
go ahead.
you choose your pair. You choose a pair of your choice. You choose a time frame. Then also, when you choose the time frame, you click on the scanner. Then you buy at the support. If it's at the support, you buy. If it's at the resistance, you sell. Then Manara should tell you if it's a buy or a sell too strong. Then also you check for the candle confirmations of the candles.
Okay.
Yeah, and also another thing you taught us was the checking the time zone, that is for different time zone. If it's London session, different sessions, sorry. If it's London session, it's New York sessions and all that. Yeah.
Awesome. Accurate. It means you are following. That's good. Yeah. Awesome. We get it right. So right. Who else want to say? I mean, who else want to try it again? I mean, Doris had done it already. I mean, who else want to also try?
Hello.
Anybody else?
Hello.
Okay.
Well, before you trade, the first thing you should do is you choose your currency pair.
Okay.
Secondly, you choose the time frame. Since you are scanning,
Okay.
you should choose between 5 minutes, 15 minutes, and 30 minutes. The third, you check what the indicator is saying.
Okay.
What one thing you thought of, you say when trading scalping, there's no need for stop loss since it's a quick trade.
Okay.
Then the fourth one, if the scanner is saying buying, you look for buy at the support zone.
Okay.
And at the support zone, you check the candle reaction at the zones.
Okay.
That's it. You check for the candle reaction at the zone because we are going for a sniper entry. Then the last thing you should check, the time zone. It depends on the type of pairs.
Not time zone, sessions.
Sessions.
Yeah.
Session.
Trading sessions.
Sessions. Yes.
Yeah.
Yes. Trading sessions. If it's London, depending on the pair, the type of pair you choose, currency pair you choose.
Awesome. Thank you very much. That's a very beautiful one. I could have gone kind of ask one more person and all that, but for the time's sake and what we're going to be teaching tonight, both of you are correct. So I won't even need to bring up any other person. And I want to assume that most of you already know these things, just for me to be sure that you're already following and I can remember the steps to take. So we're going to start from there. Okay. I'll give you some updates tonight also. Okay. Now.
Okay.
So when we are trading, before I go to that update, let me quickly, I want to show something. I think I've done this before, but I'll do it again. One, for the purpose of those who are joining us for the first time. Two, for the purpose of recap, for those of you who have probably been there before. I mean, who were even there the time I did this, okay? So I want to teach you about what we call market sessions. Oh, sorry, no, market session, market structure. Market structure. I'm going to share my whiteboard right now. So markets, I think I've done this before, but I'll do it again. Yeah. So it's called market structures. Now, there are three types of market structures. Okay. Now, this market structure is, you can call it market direction. There are three things you can call it the market structure, you can call it the market faces, you can call it the market directions. So you can call it either the face of the market, the direction of the market, or the structure of the market. Now, these structures are actually three major structures. There are no other faces, structure, or what was the third thing I call it again? Structure, faces, and directions. Only three major ones. And what are these ones? Okay. So, like I always say, you forgive my writing. I mean, this is not the real board, so I mean, you should understand, right? So we have the upwards. No, that's not the right word for it. but I can just call it upward, yes, but there's a word for it actually. So we have the first direction that is upward, which we call the uptrend. Okay, if you look at it, it's like a combination of two words, a trend and up. So which means uptrend means when the market, or trend means what is happening right now, isn't it? When you say something is trendy, it means the current happenings, isn't it? So when you say uptrend, you're talking about the current situation of the market is upward, right? We have the second one called consolidation. That has about 2 or 3 names. Some call it consolidating or consolidating trend. Consolidating permits me to continue here. Consolidating, okay. Some call it ranging markets. Ranging. While some call it what else? Consolidating, ranging, and I think those are the two. These are the two words for it. Okay, those are the two names they give to it. Yeah. So consolidating, that's the second one. So the first one, uptrend, number one. Number two, consolidating or ranging. Number three, downtrend. Of course, if you know uptrend, you already know what a downtrend is. It's just the opposite, right? Now, these 3 things, you need to remember them very clearly, very well. Let it be registered. So these are market faces. Now, guys, what is an uptrend? Let me say again. An uptrend is a time in the market when the market is facing upward, or when the market when the market prices tend to go upward. So which means if there is a price for gold at 1910, you should expect the next price to go to 1911 and the 1912 and the 1913, 14, 15, 16, upward like that. That's uptrend. So that's when the market price starts from low to the high. Okay. Consolidating market or ranging market is a time in the market where the prices of the market ranges between 2 zones. Keep ranging between 2 zones. So that means if there's a price at 1910, the price will move up to 1920, then comes down back to 1910, then move up to 1920, then come back to 1910, keeps doing that. So they call such ranging. I will draw them for you. You see them, okay? Now, the last one is called downtrend. That means if a price is starting from 1920, the next one will be 1919, the next one will be 1918, just like counting down. Uptrend is counting upward, while downtrend is counting between 2 zones. Now, so you know the names. I don't have to write the names anymore. So what I want to do right now is to show you let me show you the structure, how it looks, okay? So remember the 3 names, right? The first one is uptrend, right? So uptrend is something like this. When you see the market go this way, start from point A, point B, goes up again, point C, goes up again, up, like that. Now, you see, starting from here, the market is on its way up. This is called an uptrend. Now, for an uptrend, I want you to listen. If you have a pen and a paper, write it down. Please, I beg you. I mean, this is how to enjoy all the sessions. It's not just about watching the recordings. It's good to put some things down. Very vital things, okay? So how do you know an uptrend or upward session or upward direction? How do you know? First of all, you know by this pattern. Second of all, you name this. You name the points, the nodes. I'll call it the nodes. What are nodes? These are nodes. This point is a node. This point is a node. Node. When I say node, I mean NODE. You call them nodes. Okay, all those points here and there, all those points, sharp edges. Now, these nodes, you name them. This naming will help you to know what direction is the market. Now, let's look at it. Start from here. So the first thing, when the market is starting this way, when the face is like this, start with a lower point. Look at this. This side is lower, right? So you put it an L because it's a lower point. Now, the market moved from this lower point straight to this higher point, right? So this one becomes a high. High. Can you see that? So the L is for low at the bottom. The H is for what? The high. Now, there's something that happened after that. The market went down again. But this time around, yes, it went low. Why? Because it is lower than this high. So anything that moves from a high level to a low level becomes a low. Now it's a low, but you can't name it low like this one, because if you look at this low is higher than the previous low. So this one, you call it a higher low, HL. Now, why do you have to name it a higher low? You need to let people know that yes, it is a low, but it's higher than the previous low. Now, after this node, the market moves again upward this time around. This time around moves upward to a high. But the high here, if you look at it, is higher than this previous high. So that becomes, maybe this becomes what? A higher high, HH, a higher high. Hope you get that. If you understand this, can I see you put a 1 in the chat box before I proceed? If you understand what I just explained now, put a 1 in the chat box. If you understand the low to the high, to the higher low to the higher high, put a 1 in the chat box. I want you all to be faster, please. Thank you. Thank you. I want your 1 in the chat box. All right, good. Everyone understand that. Good. So it continues like that. Then the next one becomes what? Another higher low. Why is it higher low now? We all know already. It is higher low because it's higher. The low here is higher than this previous low. Then when this one goes up again, it becomes a higher high. Why? Because it's higher than this previous high. So you have higher low, higher high, higher low, higher high, like that. That is how to know an uptrend. So if the market is in an uptrend phase, this is how you know. Okay, so let's go to the consolidating mode, which is the middle one, the consolidating market, consolidating, or the ranging market. So what is the difference between this? Now, for the consolidating market, there's always like 2 points, a support and a resistance. So the price will move from here up high and then come down again, and then move up again, and then come down again, and then move up again, and then come down again. Now, this is called ranging. If you look at it, it's just ranging between two zones, zone A and zone B. It's called either consolidating or ranging. Okay. Now, if you look at it, this is a low. It goes to the high, comes back to the low, come back to the high, come back to the low, sorry, low, and then high, and then low. So it's the same. It's just moving around the same area. So this is called a ranging market, consolidating market, whatever. Now, most times, it is better not to trade in this kind of what's it called, zones. When the market is going this way, you don't really trade. It's advisable. But if you are scalping, it's a good way to quickly build your accounts. I mean, it's always easier to build your accounts, but with you have in mind, either you have the moment you meet your target, you stop using it, or if you want to continue, just have it in mind that you keep your stop loss somewhere close, because after some time it breaks off and then start taking a trend. So it could break off anywhere. So how do you use this for your scalping? For example, if you know that you'll be seeing the market going up and down, I'll show you examples of this. Okay. Sometimes what people do is this. So you just take a buy at the support. You'll be watching your profit. As soon as you get to the resistance, you close your profit, you take a sell because you know it's coming down again. When it gets there, you take a buy, then you take a sell. You take a buy, you take a sell. You see, before you know it now, you take profit 1, profit 2, profit 3, profit 4, profit 5, profit 6. But you don't know when, because at the point it gets so big, because all this is like gathering momentum, trying to gather enough money in the market to break off these zones, to create a direction, because there is no direction for now. So you don't know when the money will be enough to break either downwards or upwards. So depending on where you are, so if you are lucky, maybe you are in a downtrend and it breaks down, fine. But sometimes you are choosing a sell from here and then it breaks off here, and then you lose some money and all that. So it's good. You always put your stop loss around somewhere, or you watch the trade. So when you see it going, breaking off, then you close the trade at small loss. But by then you would have accumulated a lot of money. So all the phases are always useful. Okay. All right. That is the second one. Now the last one is the downtrend. So how do you know a downtrend? Simple. The downtrend always starts like this. Can you see it? So If you look at it, why is it a downtrend? First of all, check the direction is down. Now, how do you make use of this node? Now, a downtrend always starts from where? Start from a high, not a low. You know, the uptrend always starts from the low to the high, while downtrend starts from the high to the low. So the high, then it comes down like this to the low. Okay? Come down like this to the low. Oh, sorry, forgive me. So I mean, I'm supposed to start here. So the downtrend start this way. Sorry. Okay, start this way from this. So it's, let's say this is the beginning of a downtrend, right? So it goes from here to the high. Yeah, I'm right. So it goes here to the high. Can you see it from low, from this point to the high? Then what happens? Then after that, it goes downwards low. But this time around, it is low, but it's not just low. It is called, because this low is lower than the former low. So this one become lower low, which is LL. LL. Do you understand? Why? Because this is the former low. Look at it, and this is the new low. So this one is lower than this former low. So it becomes the lower low, LL. Then when it goes up, this time around, it goes high, but this high is also lower than the former high. So this one becomes what? A lower high. Now, what is the difference? In the previous one, which is the uptrend, okay, the H comes first, which is higher low, higher high. But in this one, the L comes first because the downtrend, everything is low, but just that there are different type of low. The other one, everything is high. There are different type of high. Okay, so that one you can have a higher high, higher low, because in that one, the difference is in that one, the next step will always be higher than the previous one. The next low will be higher than the previous low. The next high will be higher than the previous high. That is why that one is called higher high, higher low. But this one now, the next one is always lower than the previous one. So the next high is lower than the previous high, becomes a lower high. The next low here is lower than the previous low, that becomes a lower low. And then what? This becomes what? Then also after the lower high, it comes down again, which is low, but it's the lower low because it's lower than the previous one, lower high. So it goes like that, lower low, lower high, like that, like that, like that. So that's how you know a downtrend. If you understand the three phases in the market, or the three direction, or the three what do you call it, market structure right now, can you put a one in the chat box again? One in the chat box. If you understand what I've just explained, put a one in the chat box. The market phases, the market structures, the market direction. If you understand it, put a one in the chat box. Awesome. That's good. Now, good. I like that. Now, it is obvious. If I ask you this question now, let me ask you this question, and I want everyone to put the answer in the chat box, okay? So if we are on the uptrend, if the market is in an uptrend, so let me use the arrow, uptrend, like this. What do? Do you buy? Do you always look for buy, or you look for sell in an uptrend? So if it is buy, put A. If it is B, put B. Sorry, if it is buy, put A. If it is sell, put B. So A for buy, B for sell. So if it is a sell, put B. If it is a buy, put A. I want to see your answers. In an uptrend, do you buy or sell? I want A if it is a buy, B if it is a sell. What do you look for? Awesome. I like this class already. Thank you very much. You guys are doing well. Now, for a downtrend, let's go there. For a downtrend, which is the lower low, the lower high, what do you look for? A buy or a sell? So if it's a buy, put A again. If it's a B, if it's a sell, put the B. Good. Awesome. I like that. B, sell. Good. Good. Now, you guys are doing well, doing very awesome. Okay. Now, when it's a time for consolidating market, which is a direction like this? Is it a buy? Wait for the options. A for buy, B sell, C buy, sell. Which of the option? A for buy, B for sell, C buy, sell. A for buy, B for sell, C buy, sell. C. Good. Good. I want to see all of you responding good. Or abstain. God bless you. Yeah. But at least these are the options. Yeah. You're abstain. That's good. Yeah. So that is to say it's a buy sell. Now that is why most times uh um um professional traders will tell you just abstain, run away, run as fast as you can with your money in your hands, if possible in your mouth. I mean, so nobody can take it away. You know, yeah, because I mean, for those of you who are using, I mean, all of you are using Manara, so let me use the word. Let me say use the statement for those of you. So when you get to Manara, there's a part on the settings that tells you gives you options, bearish, bullish, unknown. Unknown is when it's consolidating. I mean, there's no direction. It's just a straight direction, a plain direction. Unknown. And anything that is unknown can be abused, isn't it? So, the best one is to abstain. Okay. So now, guys, why am I showing you this one? Now we know the market structures and the three phases in the market, any way you want to call it. Now we're going to be adding it to our confirmations when trading Manara scalping strategy. So let me go there. Sorry, guys. Let me share my screen. Let me share my screen and go to Manara. Okay, Manara, where you at? So tonight we'll be talking about two things. Okay, so I'll be showing you the strategy to what do you call it? Um, the strategy you need, okay, to take trades from monitor, okay, but that's from the monitor, yeah, and then also the ones, and then an update to the one you use in taking trades from, what's it called? The scalping, okay. Now this is to increase your accuracy. Remember, I want you guys to know something. Nothing in the world, no scanner in the world, no trading robots, no professional, no trader or forex trader, forex guru, even the ones that make $1 million in 1 week, $100,000 a day. Nobody, even the one in there, what's the name of this guy, Peter Zoro, or what's the name? These guys are billions of dollars traders. They are the best trader in the world. You know, nobody will tell you that there are no losses in trades. I mean, these are human beings, the normal human behavior. I mean, this is whatever you see on this chart is representing the typical daily behaviors of human emotions, human investing decisions, wars. I mean, if they okay, for example, right now you see gold flying, everybody will be wondering why is it flying. I mean, the last what's it called about dollar? The last report of dollar during the NFP was stronger. How they got to that, I don't know. I believe that was manipulation, but either way, and that's one of the things that why you cannot always get winnings from markets because it's influenced by many decisions, influenced by manipulation, it's influenced by people's emotions, it's influenced by people's sentiment. You understand? So you can't expect to make wins all the time, but you can always try to make sure that you have a good winning rate. Okay? You have a good winning rate. Guys, I want to tell you something tonight. I want you to know something tonight so you appreciate Manara. See, I'm a forex trader. I mean, I'm telling you that with or without Manara, I'm no forex. Now, if I'm a forex trader and I subscribe, look at it, this is my subscription, right? You should think about it. I'm not stupid, right? So Manara is very helpful, and I'll tell you why. I'll tell you something that Manara has that helps every trader that want to really succeed. Now, let me tell you one thing. Because Manara is not influenced by emotion or our personal issues. I mean, sometimes you want to make $1 billion. You use that idea to do your strategy, your analysis, and then sometimes it's a lot of fun. You know. Now, what Manara do for you is this. I want to tell you something tonight, guys. I want you to listen Doris, you are my co-host, so please mute anyone who is kind of maybe having in a noisy background at least. So when they are ready, they kind of mute themselves again. I mean, the facilities there. You can always unmute. So um, let me show you something tonight that will make you appreciate Manara. You see, I want to tell you this tonight and take it from me. Now, if you have any forex trader who tells you something different from what I want to tell you tonight, that is one way to know a real forex trader. I'm not a gambler. There are different. I mean, a lot of people are actually gamblers. They're not forex trader because they don't have trading rules and they don't even know the nitty-gritty of trading. Now, the nitty-gritty of trading are things you don't see because when a gambler always see profit, 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 profit. Oh, let me just make money. They don't look at the things or patterns. You know, there's a behavior of the market. There are things you need to watch that this will be help you. I want to shock you tonight. Let me shock you tonight, guys. Do you know that what makes you a profitable trader, what makes you to be successful as a forex trader, is not how good you are in your technical analysis. It's not even how good you are in your fundamental analysis. It's not even how good you are in the best strategy in the world. It's not how skillful you are in trading itself. Do you know that? What makes you profitable? I will tell you right now. It is the you. It is based on you, and what that you means is it's the ability to make sure you only take trades that give you a bigger, a better, or should I call it a bigger, or something, a bigger risk to reward rate. And I'll explain what that means. Now, let me give an instance, guys. I want you to pay attention to this. Now, first of all, when do you know that you can have 10 trades? I want you all to pay attention to this. Very important. You can have 10 trades in a day. For example, I don't want, okay, 10 trades in a day, and six out of these trades, six of them, even seven sometimes, but let's say six of them will be a losing trade, L, while only four will be a winning trade. Yet, you'll be highly profitable for that day. Now, guys, if your success in forex trading is dependent on how many wins you have in a day, then this should be a losing day for you, right? Because you only had 4 wins and 6 losses. But it's not dependent on how many wins or your win rate. It is actually dependent on your risk to reward rate. I will explain what this means. Look at it. You have the 10 trades today. But do you know that if the 10 trades you have today, if the 10 trades you have today is, I'm trying to show you something. Now, this 10 trade you have today, okay? If they are risk to reward, what's risk to reward? Risk to reward means RR, which means if you are trading, make sure that your stop loss in pips is lower and your reward is times 3, minimum times 3, times 2 or times 3 of whatever it is you're making. But do you get my point? Whatever you are risking, your reward, make sure that before you risk that amount, make sure that your reward, if you win, should be times 3 of whatever it is you are risking. Let me give an instance. So it means if you are investing $10, maybe your stop loss, if you lose, you'll be losing $10. Make sure when you win, you will be winning $30. So if you look at this now, ratio 1 to 3. Okay, that's ratio of your win to your loss to win is 1 to 3. And if you check Manara, you will never see a trade that is 1 to 2. Minimum is 1 to 3. Now, if you're able to get trade ideas like this, it doesn't matter how many times you win, you will always be profitable at the end of the day. Do you know why? Let me show you why. So, which means if your stop loss is $10, which means every time you lose $10, right? So, if you have 10 trades in a day and you lose 6 of them, do you know what that means? 6 now, you'll be losing 6 times 10. You would have lost 60 USD for the day. And out of the 10, you won 4. Remember, for every win, you have 30 pips. 4 times 30, you would have made 120 USD for the day. So, which means by the time you deduct your loss, which is 60, you'll be left with $60 profit. So, which means if you started with $200, at the end of the day, you'll be ending your day with $260, despite the 6 losses. If you understand what I've just explained, put a 1 in the chat box. If you do in the chat box. What is this? Sorry. What is this one? If you understand what I just done now, please put a 1 in the chat box. If you don't, put a 2 in the chat box. If you understand what I've just explained, put a 1 in the chat box. If you don't, put a 2 in the chat box. All right, good. It means all of you understand. Awesome. I like that. So this is why I appreciate Manara. If you check all the trade ideas in Manara, you see that the stop losses are always 10 pips, 20 pips, 30 pips. But any trade idea you see that the stop loss is 10 pips, check the winning will be about 40 pips. In fact, there was one. In fact, there are a lot of trades that Manara will give you. You have 10 pips winning, losing, and you'll be having like 80 pips winning. I mean, look at that distance. That means with that kind of trade, even if you win one in a day, you can substitute like 5 losing loser trade in a day. And this is very important in forex trading because see, let me tell you, trading too much is even disadvantage. Is risky in forex trading. But you want to have like 2-3 trades in a day, and these trades gives you high winning rates. I mean, when I say high winning rate, I'm talking of risk to reward. Okay, so you'll be done at the end of the day, and at the end of the week, you'll be far ahead of wherever you started from. So knowing this now, so let me take you to the scalping part of it. Okay, I want you to have this at the back of your mind. And I'm telling you, even me as a forex trader, why I appreciate Manara. It gives you very tight stop loss and gives you sharp sniper entry, which I'll prove to you tonight. Okay. All right. So let's go to that part. Back to Manara. Why am I? Sorry. If you have any questions, you can drop it in the chat box. I'll see them at the end of my presentation. Now let's look at AUD USD. Now, based on what Doris and Tonya have explained to us, the parameters for choosing if you want to scalp. The first thing, according to them, which is exactly what it is to choose your pair. So let's say I choose a pair, it is AUD USD. The second thing is I choose a time frame. We have 5 minutes, 15 minutes. I always tell you the best scalping time frames are 5, 15, and 30 minutes. Some use 1 hour, but I mean, that's like intraday trading. It's no more scalping. Scalping are meant to be in and out. Like in a few minutes, you're out, okay? So you say 5, 10, 30 minutes. Okay, let's say you choose 30 minutes. That's the second thing you do. According to them, for those of you who listen carefully to them, the next thing after the time frame is you check the scanner, the Manara scanner. Wow, can you see what we have here? A very beautiful information. Manara scanner is saying AED USD, it's a good time to buy, a strong buy. A strong buy, okay? A strong buy. The indicator is telling you a strong buy. And the trend is strong, right? That was what they said before, right? I want you to remember that. I want you to do a recap to what they said, okay? Then after that, now that we have a strong buy, which means we are choosing this pair and we are doing this. So now that we know it's a buy, the next thing they said is after doing that is a buy and it's strong, okay, it means you can buy. But where do you buy from? They said you should target support. Now look at the market. Where is the market right now? The market is at the resistance right now. This is a resistance area. This is a support area. Should we buy at this area? If you are buying, put a A. If you are not, put a B in the chat box. If you think we are buying here now, put an A. If you think we should not buy, put a B. Let's be snappy. Time's fast spent already. Waiting for you guys. All right, I see your decisions already. I said A or B. To buy, put an A. To be, all right, good. You all got it right. So we are not buying at resistance. So what do? You wait for 2 things to happen. Either one of these 2 things must happen. Either you wait for this to come down to this support and then you buy, or you wait for this to break out of this support and come back to break out of this resistance and come back to this support, then you buy. Either way, you can't buy when the market is above a line. You buy when you can't buy when the market is below the line. You buy when it's above the line, on top of the line. That is support. When it's below, it's resistance, right? So good that we all know that. All right. So now, this is according to what they said, right? And this is right. So you buy at the support. Then they said something again. They say before you now take a decision to buy, which was what we discussed, you must always look at the candle formation for your confirmation. Okay, the confirmation that will determine whether you buy or not. Okay, so when we talk about candle formations, for those of you who know what candle formation is this, Who can tell me before the market move up at this support area? What kind of formation is this? I want to hear that. You can unmute yourself and say it if you know it. Let me help you. I'm giving you the clue now. Look at these candles. What do they look like?
Trend.
What?
I can't see your.
You can't see what? I'm zooming the candles to you now. These candles are the support area.
It's three inside up.
Eh? No.
Three
Is it what?
inside up. Three inside up. Hello?
So,
Hello?
hello?
I said three inside
Hello?
up.
Yeah, I can hear you. 3 inside up.
Yes.
Good, awesome. So, what is it for? Is it for buy or sell?
It's for buying.
You see now?
It's for
You
buy
see?
because
My
it's
people
at
are
the
now, all of
support.
you guys are now support area. So you guys are now forex trader now. You see, you already know now. This is what we see, and with this one, you can decide to make a buy. So what does that mean? So you see that is right. So so when you see this last confirmation, this last candle, giving you this last one. Let me show you the last one. Now the first one was this, then this, and this last formation let you know the confirmation that this is 3 inside what up. So now the moment you see this formed, what do? You buy from here. And when you bought from here, what happens, guys? Look at what happened. The magic happens. And what's the magic, guys? What's the magic? The market went up. And when it went up, how much would you have made if you are taking the buy based on this signal? How much would you have made? Let's calculate. So you entered from here and then went as far as getting to this part. What did I always tell you when the market gets to the resistance? What did I tell you to do? What was the last thing I said about whenever you see the market get to a resistance, what do?
We should take our profit.
Good. You should take your profit or you move your stop loss. Now, did you see what happened? It gave you 34 pips. 34 pips profit. That's a lot, isn't it? But after the profit, there is tendency of a reversal. It could break off, but you don't want to know. You don't want to guess because you are scalping. And the money is profit. And if it's a profit, you don't need to hold on to it too long. You take the profit and you wait to see the reaction again. Okay? So these are what you guys explained to us, demonstrated in the chat. Hope you all understand that, right?
Yes.
Good.
Yes.
Now, let me now add the latest information I gave you tonight about the market structure. How do you use that? So that is used from the beginning. Okay, there's one thing that we missed, the market sessions. Okay, I said always trade around the market sessions. Okay, did I say that right?
Yes. Yes,
Okay,
coach.
good. So let's look at this market session. Australia USD. Australia USD. Now there are two ways to do that. But the faster way, which I believe will help you guys out, is that was why I said you should download the app, the Forex Hours. So let's go to the Forex Hours. So before you even choose your trades, this is the first thing you should do. Now, all of these things, not that without them you may not win your trades, but just that doing them will help you to increase what? Will help you to increase your accuracy, your winning accuracy. Do you get? Because when you are banking your money on a particular thing, you want to be sure. Now, look at it from what you are seeing right now. Okay, the US, they are on bank holiday. Now, if you look at my time, my own time, right? Now, 9 p.m., the time is what now? It's 9:17. So 9:17 is between here and this 10 o'clock, right? So if you look at the time now, what are the pairs I can trade? Can you see USD there or not? Do you have USD there or not?
We do it
Guys, can you see AUD USD or not?
Yes, we can.
It's there.
Come on, man.
It's there.
You have to be fast so we can cover this in time. Remember, the recording should not be too long. Can you see AUD USD or not?
Yes, coach, it's there.
It's there. We can see it.
All right. Do you now see another reason why you should take it again? Do you know why it's very strong? Look at this. Can you see the rating here? What is that? What happened? Oh, I'm coming, guys. It went off. All right. So 9 o'clock again. That's the problem when you are using something free. They keep putting adverts. Adverts keep popping up. All right. So you have to pay a price somehow. That's on it why you are presenting. That's the thing with free applications. Sorry, guys, it's loading up, and I'm using that time to take my coffee. All right. So
Coach, where did you
AUDUSD.
go? Sorry, Coach,
Yeah.
where did you go to get
Can you
this?
see it? Can you see it, guys?
Where?
Yes.
You download the app. The app I asked you to download the last time. Oh, you were not on the meeting the last time. Probably you didn't watch the video as well. If you watch the
last
video, yeah, the last meeting we had, yeah, I talked about this application.
Yes.
Okay.
one?
So if you look at this, guys, I want you to look at this. Do you see that it's having 44.44% in terms of the volatility level, which means there's still money in this market. Okay. And then it's in green, which means it's buying. The green, you see the green, the figures are in green, which means it's buying. Do you get?
Okay.
If you
Yes.
check now, do you see it now? So this helps you to choose your pairs. So whatever pairs you see here, guys, is what you should go for to look for in Manara, especially the ones that are showing, all the pairs that are here. The ones that are showing red are probably selling. The ones that are showing green are probably buying. Okay, so let's go check again. Let's go check again. So that's why AUD USD is a good pair for you to take now, because why? It is a session for AUD USD. Do we understand?
Yes, coach.
All right. For those of you who will probably not understand, don't worry. You need to watch the last video, which I don't know if I've posted that thing. So let me check. I'll check. Okay.
But you haven't. You haven't sent it. You haven't yet sent it.
Hey, you have an escape route. Don't worry, I'll do that tonight. I'm sorry, that's my fault then. So, guys, so before you take trade, so I'm adding to the parameters now. If you have your pen and paper, okay, like you listed all the parameters that Doris and Tonya listed tonight. So what you do now is your number one will change from whatever it is. You now put the number one thing is to check the market sessions and check which pairs, based on the time you want to trade, is in session right now. So when you check, you see what we are talking about. Okay, let's check. I want to check something. NZD USD. Oh, I didn't choose. What's it called? NZD USD. So you put that as the first thing now. The first thing is what? Check the market session. So you write it. Number one is check the market session. Number two is choose a pair. Okay. Number three is choose a pair. Then you now need guys, do you see what is happening? If you go back to the market section, did you see NZD USD2 also listed as one of the trades you should take? And it was in green. Remember, I showed you.
Yes.
After 80 years. Now you see that it gives you the expo. So instead of you searching all the currencies, trying to see which one is buy and strong, sell and strong, you don't need that. The market sessions give you the list of pairs you look for. You just go here and make your job easy. Do you see that now? Is it helpful?
Yes. Yes, good.
Is it helpful, right? Good. So now that we know this, now another thing that we're putting now is the market structure. That will be the last. Okay, that will be the second thing. Yeah, second thing after the session. So the first thing now is the market session. The second thing is the trend. You want to know the direction of the market. And how do you know that? Remember what I taught you tonight? You just look at this. Just look at this. What do you see here? Is this an uptrend or a downtrend? Though the market session would have given you the expo, because if it's showing green, it means the market is buying. If the figures are showing red, it means the market is selling. But this is an additional one anyways. So with that market session, combination of that will help you choose good pairs and always make you to make money. Your winning accuracy will increase. So look at this one. What does it look like? Uptrend or downtrend?
Uptrend.
Yeah. Uptrend or downtrend? I want to hear it from everyone. Is it an uptrend or downtrend, guys?
Uptrend.
It's only Tonya I'm hearing her voice. I don't know why.
Uptrend.
Is it only Tonya? Now you guys are talking. That's what I want to hear. All right, so it's an uptrend as it is. As you can see, it's an uptrend. Let me put this one in white so it can be very bright. All right, look at the arrows uptrend. And how will you know that? Let's look at it together. I will show you how you know that. Remember what we talked about? This is what? Oh, man. So this is what? Look at it. This is a low. This is a high. Came down. Higher low. Higher high. Came down, higher low, higher high, higher low, higher high, higher low, higher high. You see it now? So this is a big confirmation that I should take this trade. I only take it as support area. I think with this, let me just recap again. The first thing you do, guys, I want you to write it down on notes. You check the market session. Okay, that's when you are taking Manara scalping trade or Manara scalping strategy. The first thing is check the market session. But I will show you guys the app. Remind me how to download the app. No worry, I'll send the video to the group. So you check the market session, number one. Number two, check the market trend or the market direction, which the market session would have exposed to you by the figures. If the figures are showing green and check the percentage, it's already showing you what you want. Okay, that's the second thing. The third thing, what? The third thing now is to go to, because you're already okay. Let me put it right. Let's start again. Number one, check the market sessions. Why are you checking the market sessions? You tap on the flag of that session, depending on the time you are. So it will show you the list of the currencies you can trade that has money in the market while you want, at that particular time. So when you check the list, you pick one. When you pick one, you pick them based on what? Based on their volume. You look at the number on the market session. If the percentage is high, and you look at the other one is 0.44%, 0.58%, those are good ones. You can choose a sell, you can choose a buy. If you see the numbers in the figures are in green, it means you're buying. It means the figures are in red, means you're selling, right? But what you want to check there is actually the number of pairs you can trade. So when you have a particular pair in mind, what do? You now come to Manara, and what do? You search for such pair, like I did with NZD USD and AUD USD. And after searching, what do? You choose a time frame, preferably 30 minutes, 15 minutes. Okay. Then when you choose that, what do you do after that? So the first one is market session. Okay. Second thing is what? From the market session, you choose a pair. So the second thing you do now is input the pair here. The third thing is choose a time frame. The fourth thing is check the scanner to check the reading. It's telling you buy and it's strong. Always make sure you either see sell and the trend is saying strong, or you see buy and it's saying strong, or higher. Sometimes you see strong buy. That's a better one, even much better. Okay, but make sure the minimum you check for is buy or sell and the trend is strong. Don't take weak trend anymore. You see that we're advancing, right? Now after the scanner, what do you do next? If it's a buy, what do? You look for support area. Make sure that when the market is at the support area, okay, to buy. If it's a sell, you look for the resistance area, which is the top. So when the market is at the resistance, you sell. I do believe it's a sell now. This is the best time for you to sell here. But before you sell, what do you check? Which is the fifth thing. Sorry, is that the fifth? Market session, currency pair, time frame, third, scanner, fourth. Okay. I'm getting it wrong. Market session, okay. Then the direction of the market, which is the trend, whether uptrend or downtrend. Then after that, of course, the pair. No, you have to know the pair before that. Forgive me. So the market session, the pair you choose from the market session, which you know the market session from the app, right? So you choose the pair. When you choose the pair, check if it's a downtrend or uptrend. Then when you choose that, check the time frame, which is the fourth thing. Then the fifth one is what? Check the scanner, which is this. Then the scanner, the moment you get whether you buy or sell, what do? You choose, if it's a buy, you choose it at the support. If it's a sell, you choose it at the resistance. Then after that, what do you do? Before you now take your trade, you check candle formation, the candle confirmation. Okay? The candle confirmation. So when you see a buy, when you see the candle confirmation, it tells you whether you are buying or you are selling. Okay? If you look at this one now, I think this one is giving us a three white soldiers. Three white soldiers. Can you all see it? 1, 2, 3. For those of you who were there when we were doing the candle chart pattern, 3 white soldiers. But if you're not here while we're doing it, don't worry. You'll still get it from the group or get it from your mentor, whoever invited you or added you to the group. All right. So after that confirmation, what do? You take the trade and you wait for your profits. Okay? That is that. Now, the last thing I'll teach you, okay, about scalping before we close on scalping tonight, so we can go to monitor, okay, is how to put a stop loss in case you want to put a stop loss. How to do what? How to do what?
Put a
Put
stop
a
loss.
stop loss.
Good.
Stop loss.
Now that one is simple. Just follow my lead, okay? Now, the moment you enter a market, okay, let's say here now, at this support here, this is a support, right? Now you waited for this candle, 1, 2, 3, call 3 blacks, 3 white soldiers, okay? You now took your buy here. You took your buy here after this third candle, right? Now, if you're going to put a stop loss, guys, your stop loss will be below the last low. That's the previous low. What do I mean by that? Remember I told you about low, high, right? If you look at this one, this is the support. Below the support, okay? Below the support, there was a movement. There were candles here, right? So you will now put your stop loss here. You put your stop loss here. Because look at this red candle, okay? This red candle you're seeing here, okay? The last low before this movement, before these 3 white soldiers, 1, 2, 3. The last low is here. So under the wick, you put your stop loss. Don't worry, when I show you the second example, you understand. So if you're going to put your stop loss, it will be under. You give the candle. Make sure this candle have a little room between them, so you can put your stop loss here, or some you put your stop loss here. Now remember, when scalping, the stop loss is always bigger. Okay, there's no way you can do it. It's always bigger. It is safer to even put your stop loss here. Sorry. So you put your stop loss at the last low. You always put it here. This is the last low. Where's my pointer again? Let me show you the last low. Look at this. This was the last low that led to this high, right? So you put your stop loss here. So your stop loss will be like 59,580. Okay, so let me show you another one so you understand again. Let's say you want to take a buy from here. Let's say you take a buy from here. Okay, at least what you can see here, you can see what we call a bullish engulfing, right? A bullish engulfing candle. So let's say you decide to take your buy here. You took your buy from here after this candle here, engulfing this red candle. You took your buy here. Your stop loss will be below this one, the last low. Can you see it now? That's the last low before this movement. You come to this last low. In case you still don't get it, let's check another one on this particular one. Okay, so let's say you took a buy from here. Let's say you took a buy from here.
Coach, please, can you use your pointer? Yeah.
This is my pointer. Let's say you took your buy from here. First of all, you have to check whether you can take a buy from here. Okay, so we can call this one the 3. Is it 3 inside up? Yeah, 3 inside up. Or what do you call it? Yeah, 3 inside up candle, something like the red, the green, then the green up here. Okay, let's say you take your sell here, your buy here. Now your stop loss will be below this point. Can you see it now? Anywhere below this point, so long as it's not touching this candle, just put it somewhere. If you can close here, just put it here. Do you understand, guys?
Yes, coach.
Yes, sir.
So for you to understand again, let me check another pair. You see now that I'm updating this training, so gradually you see that it's becoming a full strategy for you to enjoy yourself on Manara. Okay, I mean, you see, the thing is this: the truth about Manara is you should be independent. The idea it should be simple for you. You should be independent. You can take a trade such that you just make profits and you don't need to call your mentor or wait for someone. You make profit every day, just that you don't abuse it. You know, sometimes when you possess a power, you want to be over, like you be excited, you want to continue. You don't over trade. You need to have it. We'll talk about that maybe tomorrow. If there's no time tonight, I want to teach you about the compounding plan, the risk management. I think I'll put that for tomorrow. Okay, how to set your trading plan for the day so you won't have issues or you lose money or overtrade, and also it will help you to know where you are going and you'll be excited about the journey. All right, but that's not tonight. Okay, so just focus again. Let's Let me show you another example. So let's say here, you take a buy from here, AUD USD. Why would you take a buy? Always have a reason to buy. Now, guys, I want to tell you, not every time you see a candle confirmation that you recognize. If you don't see, you don't take it, or you just risk it. But you know that you are taking this one with you. I mean, you can still take it, sorry, at support, even if you don't see, because at least you have other confirmations, right? But you know that it's not as accurate, to be as accurate as the one you know, isn't it? So let's look at this one now. Is this one accurate? Yes, it is. If you look at it, do we have any candle confirmation here? Yes. At the support here, you have engulfing, bullish engulfing, isn't it? So if you entered here, good, you entered it by here, your stop loss will be below here. Now, do you know why? It is safe because even if it will pull back, like a question Sylvia asked us the other time from Madam Sylvia from Uganda. She asked us this. She was asking that sometimes when she entered the trade for a buy, she sees it going down and then she doesn't know whether to close or not. So with this now, no matter how far it goes, okay, it's not supposed to, because it's an uptrend. It is an uptrend. There are rules they respect. The low can never be lower than the previous low, because the moment it's lower than the previous low, it's now becoming a downtrend. And at that point, if you hit your stop loss, it's okay because it's no more a buy. You don't want to wait for that kind of trade and lose your money. So that's why the last low is where you put your stop loss, which means no matter how low it gets, it will stop and start going up again and put you back in profit. Hope you understand now.
Yes.
So meaning we now know how to set our stop loss, right?
Yeah.
Good. So we are done with this one for tonight. Okay. All right. So let's go for Manara monitor. How to make money using Manara monitor. Again, how to take trades and increase your accuracy in Manara monitor. Now let's go over it again. Why do we have Manara monitor? Of course, we have the notification which automatically helps you to scan the market, get you the trade idea, and tells you when the trade idea gets to the entry points. Now, that is a good one because when you see it, you take it fine. But the truth is this: in order to help also increase your accuracy sometimes, or maybe sometimes when you are not there, when the notification comes in and the trade is probably going already in the direction where it should go and you missed it, sometimes, so especially people who have other things they do, like you have a job you do or something like that, so you may want to sometimes be in charge of your own trade. You want to take trade ideas that you prepare for. That's why we have the monitor. So the monitor, what does it do for you? Based on your preferences, based on your command, based on whatever it is you've put in your commands to do for you, Manara monitor will help you scan the market, get the pairs you need, and prepare them for you to take. Now, this part depends on your decision here, whether you choose mature, incomplete, or complete. Now, if you choose complete, you know what that means. That means you are telling Manara monitor to only show you ideas that are already at their entry and already moving. Now, that is as good as you taking notification ideas, which means sometimes if you're not there when it happens, you miss it. You may miss good trades like that without catching up. So that's why I always tell people when you are at the monitor area, you don't need complete. Okay? You don't need complete because if you're going to be using complete here, it's as good as you using notification. Okay? Or except you want to use complete because you are right there looking at the screen and you want to just be there. You will not leave that place. You want to see it when they come. Fine. Now, you can use incomplete. What is incomplete? Incomplete is the idea is still far away from the entry. Now, that gives you enough time, an ample time to prepare yourself to do all these things I'm going to be teaching you tonight, all the confirmations. Okay, the confirmations, what do I put to it now? All the confirmations you need to do to increase your accuracy level. What are we talking about accuracy? You want to decrease your chances of losing to almost the barest minimum and increase your what? Your chances of winning to the highest level. That's how to enjoy trade ideas. Now that will also help you to avoid some trade because any trade that does not fit into your confirmations, you let go. The one that stay in, you take that. So that will decrease your number of losses and increase your number of winnings. I mean, this is time for you. You enjoy Manara more if you focus on this and you absorb this knowledge I'm going to be giving you tonight. Okay? Now, you can use incomplete or you can choose mature. What is mature? You want to choose mature because you feel that you don't want to wait for an entry that is far away. You want to wait the ones that are close to the entry, maybe 1 to 4 candles away, or one to 4 candles to get there. Either one, it's okay. It's still around the entry, right? Now, depending on the one you choose, it's okay. It's okay. Okay. So now, for the purpose of this training tonight, Okay. So I would have loved, okay, let's use mature, for example. So let's use mature now. So now you've chosen mature, you can use incomplete too. I mean, incomplete actually may even work better for you because that will take a long time. But the only reason about incomplete is some of them, especially trades like H4 and daily, may not get there that day, the second day. And some of you, your adrenaline push is like you want to trade a day, every day. You must trade. If you don't trade a day, you feel like something is missing. You know, you don't get yourself like, Manara has not sent me trade today. What's going on? Oh, the world is ending. Rapture has taken place. Things like that. I mean, so for people like that, you know, if you stick with mature, so we can always have a trade a day. It's like one trade a day takes the doctor away, isn't it? So no problem. So let's stay with the mature. Now, so based on the mature, now it has given you this trade idea. If you check the mature now, this must be trade ideas that are close to the entry or they're already at the entry. Like you see, this one is already at the entry and it's like one candle away, but just that one candle has gone deep in profit already. As you can see, guys, sniper trade is already on its way down. How many of you have noticed that most chef ideas, and especially when the pattern is bad, is always winning? That's why it's good to keep your trading journal. When you have a trading journal, it helps you to note the pairs are always winning more, so you'll be taking them more. And I think Sheriff will understand what I'm saying because that guy is called analysis himself. So the most chef idea always winning. I mean, that's something to note. It's not part of our presentation. I'm just saying. Look at this one now. It's already going in profit, as you can see. Is a sell and it's already going. So imagine now we are late to this one because it probably came in earlier on and done that. But let's check the GBP odd. The GBP odd is also at the entry now. Good. This one now is at the entry. It's not going anywhere yet. I mean, it's around the entry. So even if you take it around this time, it's still okay. It's around the entry, as you can see for a buy. Though it's already moving in the direction it should, but it's still around the entry. USD CHF is around the entry. Do you now see what mature means? It still gives you time to enter so meaning you want to enter almost immediately. You see, Euro USD, I mean, these are nice ideas. Euro USD also is at the entry area. Can you guys see what it means now? You see, they're all at the entry area. I mean, they are good for take. That's what I mean by that. So if you want to take them, but now don't just take this trade idea. They must meet 3 criteria. How many did I call it? How many did I call it?
Three.
Three.
Three
Criteria.
important criteria. Let's go back to my board. Okay, 3 criteria you must look out for. I will explain these 3 to you. Now, the 3 of them, I would say they are simple, but one of them is a bit technical, which you just have to pay attention, and I think you will get it right. Now, the first one is number 1, Manara entry. Manara entries. What does that mean? So it's like you're asking your question before you take this trade. Did Manara call this trade idea? Did Manara call it? Yes. So that means Manara entry. Meaning Manara gave an entry for this trade. So that's the first criteria before you that will determine whether you should take this trade or not. So long Manara calls this trade, it means there's what? There is an entry. So first thing is there Manara entry? You ask yourself this question. The second thing is, oh, don't do that. Don't do that. Come on. You see, it has done it already. Very stubborn thing there. All right. Manara entry. I hate anything that has to do with writing or typing. Really. I mean, it's like punishment for me, but it's okay. Manara entry. So that means did Manara call the trade? If the answer is yes, yes. The second thing is, does the trade has an institutional can do? I will explain these parts to you. Institutional can do. Now let me spell it. Like I told you, I don't like writing, but so let me prove it so you won't think I don't know how to spell. Institutional can do. So you be thinking I'm running away from spelling. It's just that I don't like writing. Institutional. Yeah, I'm right. Can do. Okay. Okay. I'll teach you what that means tonight. Then the third one is 88%. I'll also teach you what this means tonight. So the first question you want to ask yourself is, did Manara call this trade? Yes. Does he have an institutional candle around the entry? Yes. Is the institutional candle having 88% Fibonacci around that entry? If the answer is yes, then you go take that trade because it has very low minimum BRS, minimum losing rate, and very high bogus winning rates. Now, remember, in Forex trading, like I told you, the best you can have 80, 90% win rate, fine, but sometimes you lose. Why won't you? I mean, if you have a 90% winning rate, the 10% have to count for something, isn't it? I mean, the 10%. So if you lose once in a while, that's the part of the 10%. Okay. So, but this helps you to make more money. Don't worry, these are adverts. I'm kicking it out as soon as they allow me. Good, because it's free app. You know, all these things are free. Can't be paying for everything. Okay. So now let's look at this. Let's look at this. Okay. Also, guys, I think I'll add my own. Forgive me. Let me add my own to this. Let me add my own to this. Okay. So I won't say 3 anymore. I'll make it 4. So the first thing is the market structure. At least I've thought about it tonight. So add that one as number 1. Okay. So it's now 4. So the first one is if they call a buy for that market, for that particular pair, you want to be sure that the market is what? Is in an uptrend. If Manara calls a sell, you want to be sure that it's a downtrend. Okay? That's the first thing you check. Then you now check the second thing. The Manara entry, the IC can do, and 88%. So add that to your list, okay? Add that to your list. See, so the more conditions, the better it is when you take the trade. So let's go for the first one. GBP CHF, for example, 15 minutes. Now I want to apply these 3 things, okay? I want to apply these 3 things. So what you do to enjoy this, what do? You look at this trade idea. What is it called? What's the pair? What's the name of the pair?
GBP CHF.
What is the name of the pair again, guys?
GBP.
Come on, look at this pair. What is it? What's this pair? GBP what?
CHF.
Good. What is the time frame? What's the time frame? Can you see it?
15 minutes.
15 minutes. Good. So what do you do, guys? You go to chart area of Manara, so you can see it clearly. You go to chart area, you type GBP CHF. GBP CHF. Remember, always go for Oanda. When you type GBP CHF, it shows you different exchanges. So you choose Forex Oanda. Look at it, it's there. I've chosen Oanda, GBP CHF, and the time frame is what? 15 minutes. Now, the moment you do this, the first thing you want to do, guys, let me show you what to do here. Okay, I think it is here, right? You want to make this, where is it? Okay. Where is that thing? I'm coming. Okay, yeah, see? Can you see this? Let me go back. Is it this one? Okay. I think it's this. Wait. All right. So what you do is tap on this, because if you're using a phone, I'm talking of people who are using phone. I mean, if you're not using a phone, this is easier for you. It's bigger. You can be able to see things clearly. So if you're using a phone, you see this thing here? Can you see it? It's telling you about full screen. Okay? Can you see what I'm pointing?
Yes.
Okay, yes.
So it's a full screen. So you tap on it. So it makes it fuller. So now when it's a full screen, it's 15 minutes GPCHF. First thing you want to check is is it a buy or sell? It's a sell, right?
Yes, a sell.
Okay, so you want to check what market phase is this. Is it a downtrend or an uptrend? Is it a downtrend or an uptrend? So you move it backward to see. You want to be sure it's coming from the top down, or it's coming from the top, from down to the top. It's coming from where?
The top.
So downtrend.
Top. Okay. Though you're right. Yeah, it's coming from the top down. So it's a downtrend. Yeah. But though if me personally, I don't like the structure enough. I mean, maybe because at 15 minutes, let me check at 30 minutes and see if it's. I mean,
yes,
because it's not. I want it to really be facing
full.
down. Yeah, I want it to be facing down. Do you get it? Look at it. Here it looks like it's consolidating. Okay. I think it's downtrend because but look at this point. Let me show you where I'm skeptical about, what I don't like is this part. It's showing me as if something that just broke out from a I'm coming. Look at it. So see it's coming like this, then it's a bit coming like this.
Like
So I'm not really cool with
consolidating.
it. But yeah, it looks like something consolidating, not coming down. So I mean, I'll prefer something like this, you know. At least something close to that, right? So
Yes.
for me, this is a no. I won't take it. I won't take it.
And
But
coach, and
let's just.
again, Manara said the trend is weak.
You say what?
Manara says the trend is weak.
God bless you. You see that now? Even on 30 minutes, right? So let's check it. That's another thing again. You see, that's another way. You see, he said it's weak. No, and he's saying it's a buy.
Yeah, but
At
the
what?
trend,
Okay, at 15 minutes. Sorry, at 15 minutes.
even the 15,
Even a strong buy, right? 15 minutes, right?
Yeah.
even strong buy, but the trend is weak.
The trend is weak. So that's what I'm saying. So what do? You leave this trade. Do you see it now? You leave this one and go back again to monitor. So you don't even need to stretch yourself, even if it looks like it's selling. Now, don't get it wrong. Sometimes it may even give profit, but you don't want to do that. You want to just use accuracy, okay? So let's go to GBP odd. What is GBP odd saying? 15, is it 50? How many minutes? 1 hour. So let's go GBP odd, 1 hour for a buy, right? So let's type again, GBP odd. You come here again. You see that our criteria are working, right? GBP odd, GBP odd, or under.
Who's
Who is
that?
tired?
It's me. Oh.
Don't be tired, eh?
I'm
I
just
mean,
coming
when
from
when the
work.
dollar start, don't be tired. When the
Yeah.
dollar start hitting your bank account, you won't be tired, So, all right. So, we want to check this one at 1 hour. First thing you want to check, is a buy, right? So, if you look at it, is it an uptrend or not? Uptrend or downtrend? Look at the structure.
Uptrend.
Uptrend, because it's going from here up to this place. So that one is something that is good. I mean, that's a good signal. The second thing you check is Manara entry. Did Manara give an entry? How would you know? So you come here now. Look at what I would do. Manara gave that entry, but you want to know which entry Manara gave. You come to this part, and then it was a bat. Remember, on that, what's it called? Was a bat, right?
Yes.
It was a bat. So you click on show. When you click on show, it shows you Manara entry. The moment you click on show, what do? You tap the scanner, it will disappear so you can see the entry Manara gave at that area. Okay? Now,
Okay.
that is second criteria. Manara gave an entry. You have it now. Okay? So let's go to that point where you enlarge. Okay, enlarged. Okay, it's supposed to be enlarged there. All right. So now, what is the second thing? I talk about IC can do, isn't it?
Yeah.
IC can do. Now, guys, I'm going to teach you what an IC can do is. Let me first go and show you what an IC can do is on my whiteboard. Then I'll now come back to this. What is an IC can do? Okay, an IC can do is a small can do that is preceded, or that's not the right one. It's a small can do that is succeeded by a larger opposite can do. Okay, which leads to a bigger move after that. I will explain what that means to you. So let's say this is a small candle. Okay. Now let's say this. I will represent the red candle with black, because here I don't think there is color. This application. Yeah, they hang too much. All right. So a small candle. Now, in the case of a buy, now if you see a small red candle, so let's assume this is red candle, succeeded by a larger candle that is green. So I'll put the green as white. I won't paint this one, so the green. Now, whenever you see something like this small red candle becomes the institutional candle. So you put a line or a rectangle box on the top of that red candle and the bottom of it. So that area between point 1 and 2 becomes a zone where you expect an entry to come for a buy. Do you understand? Now, let me explain again. Why is this one not having colors? Okay, let me see if this color will work out for me. All right, guys. So let's say this is a red candle. Let me do it again. This is a red candle. Okay, a red candle. Can we see that?
Yes.
Now, you have a red candle. Now, this candle, after that, you now see a green one, a green candle. After that, that is bigger than the a green candle that is bigger than the red candle, like this. Okay. Now, when you see that, then after that, okay, the rule is this. You now see that after this green candle, you now see about one or two green candle following themselves upwards. One or two. It could be one, it could be this one and this one. Before it's more red, then upward going, or three. But the main point is after this red candle now, the market will start going up. Now, anything you see like this area where the red, where the red stopped, that area becomes institution. What does that mean? Institutional candle means the banks, the guys that really own the market money, the money in the market, the guys with the billion, they are the one we are following. If you follow them, you will not lose because they are the one that direct they determine the direction of the market. So you don't know when they will come into the market, but how you will know they are already in the market is when you see a pattern like this. You know that, oh, these guys are here. So whenever you see them, you mark out that area where the whole market started from. Do you get it? When you mark this area out, you now wait for the market to come back to this area. Anytime market come back to this area, 80% of the time, it will buy up. So you come and wait here for a pending order for a buy limit. After this one, you wait for it to come down again to this zone, and then you take it for a buy limit. Do you understand?
Yes, sir.
Do you
Coach,
understand,
Please
guys?
come again.
coach,
Now,
coach,
yes.
please, this institutional candle that you are talking about, is it the same thing as as other block?
Bullish. Yes, almost like the same thing. They're always in the same area. Yes, like other block. But you know why it's different from a bit different from other block is other block can be in different forms, which that one is later on. I'll be teaching you guys on. But this one must always be like this. The rule guiding this one is the red candle. If it's a buy, if it's going to be a buy, there must be a red candle, smaller one, preceded by or succeeded by a bigger candle or a bigger green
Okay,
candle, and then one or two, three, like that. Then the market going up like
okay,
that. That area,
okay,
the institution actually deposited their money. They are coming back for that money to go up again. Or in
okay,
the case of this, yes, in the case of a sell, let's use sell example. Maybe some of us will still get it now. Let's use the sell example. Okay, sell example now. Sell. So for a sell now this one will always happen at the support. The buy will happen at the support. So for a sell, so the sell will be like this. There will be a smaller green candle like this. Okay, preceded by a long. It is a green candle now. Okay, preceded by a long, or let me use the word, followed by a long red candle. Oh, this is not red candle. Come on, this color is not red now. Women are here before they start telling me, no, coach, that's not red. Women have plenty colors. Start telling me, no, coach, that one is burgundy red, and all those names that we don't know. Start giving the colors surname. So let me be careful. Yes, yes, it's wine red. No, this one is whatever red.
Sorry.
Pepper red, fire red. I mean, I don't know all those stuff. So this is a green candle followed by a long red candle, and then maybe one or two more candles downwards. This place becomes your area of concentration. That's the beginning, the top of this candle, the green candle, and the bottom of this candle becomes your point for a sell in the future. So you wait for the market to come back here so you can sell. So this candle is the one that is called institutional candle, which means the institution are here. That's their pattern. That's their footprints. That's how to know where they are, because it's good to know where they are and where they deposited their money, so you can wait for them there and move with them. Because when you move with them, they won't be able to displace you. They will displace other retail traders. Do you get my point?
Yes, but
coach.
coach, I want to ask something. This
Yes.
this small candle, can it come in form of an evening star or a morning star?
No. No.
Okay.
It has to come this way. Hmm?
Okay.
So it
that's
doesn't have a
nice.
peak.
It should be
Doesn't have a
full, coach.
You
It's
know,
always full, right? But short.
yeah, I mean, what do you mean by full? Like the body, right?
Like no weak, like the
No,
top.
sometimes it comes with weak, but not long one. But the most
Okay.
important thing you look out for is there must be smaller, and then it must be followed by a bigger opposite candle. And then after that first candle, there must be one more or two, okay? And the market must go that direction of the bigger candle. So the bigger candle is the green candle, the market must go up. If the bigger candle is the red candle, it must go down. And it's always long. I'll show you an example of this. Okay, let's go check the example before we go back to Manara. Let's go check the example. Yeah, let's go to my chart. Whoa. I'm expecting this guy to come here for himself. All right, let's check something like Euro USD. I don't want to destroy that chart I have there. Let's check something like Euro USD. All right, so now first thing is this, guys. To know an institutional candle, it's always happening anywhere you see long moves. The beginning of that long moves is always with an institutional candle, most times. Now let's prove that. Let's see what I'm talking about. Okay. Now let's check this place. Okay, let's talk about long move. What do I mean by long moves? Let's look at the long move first of all. Let's fish out all the long moves. Okay. All of you can see them already, but for the purpose of those who don't know, let's just look at them. So look at this move now. After this place, what happened? Is a long downtrend, right? Then after this place is a long uptrend. Get out. So can you see it up, long? Okay. Can you guys see what I'm saying? Can you see this one also?
Yes.
Long. Is a longer one. Can you see it? This one also longer one. You know, so it's always like that around long move, because for a candle to go this direction without much break, it means there's a lot of money, and that money means institutions are the one in the market. Okay, so when they come to the market, you will know the difference. Okay, so let's see that first of all. So now let's go look for institutional candle. Now, guys, can you see one?
Yeah.
So look at this. Look at this. Look at this small green candle. After that, a long candle, a opposite candle, red, and then 1, 2, making 3. Do you see it now? Now this becomes an institutional candle. So usually, what do you do? What do you do when you get here? You come here, you put one line here, and then you put another at the top here for the green candle. That green candle is the institutional candle. Or you put a rectangular, whatever, right? And what do you expect to happen again? So when you do that, why do you do that? You put this line because you will not go and wait for this market, that you expect the market to come here. Anytime the market comes here, you want to enter a sell. Did it happen like that or not? Look at it. The second time the market came there, so the market came down like this, right? And then when it came there, what did you see here? It sold. Do you see it now?
Yeah.
Yes.
Do you see it? It sold.
Yes,
sir.
So if you check the price, if you check the amount of pips that happened here,
Constitutional card.
that's like 18 pips. Am I right? Yeah, 18 pips. Yeah, 18 pips sold. This is 15 minutes, right? So imagine. So even on 18 minutes, it happens. Okay. So anywhere you don't see institutional can do, you don't target it. So you only target it any area you see institutional can do. Now that's for a sell. Let's look for a buy. So look at this one now. This is an institutional candle also. Why? Because there's a smaller red candle, succeeded by one, followed by the green candle, and then 1, 2,
1, 2.
making 3, and then went up. So here now you wait for this market to come down back here. It has gone up now. Anytime it comes back here, you go for a buy from this angle. You put one here, you put one here. So now that we understand, let's go to Manara. Let's go to Manara.
Coach, on what time frame are we looking for the institutional candle?
Say what?
On what time frame are we looking for the
Time frame?
institutional candle?
Yeah, whichever time frame Manara gives you. Remember, we are working on Manara monitor. Don't forget, right? We want to see the which pairs you should take, which one you should not take. And to do that, we now put out these parameters on as the confirmations to increase your
Okay.
accuracy. Yeah,
Okay,
so
cool.
now look at the GBP odd. This one we are looking at. GBP odd for 1 hour. Did you get? So GBP odd for 1 hour. So, and I said for us to see it clearly, we go to what? We go to chat. We go and look for GBP odd for 1 hour, which is 60 minutes on Manara chat. Okay. So you type GBP odd here. GBP AUD. Now to bring out different exchanges, you choose Rwanda. Now, so this is what we have, and it's supposed to be a buy, right? Isn't it? Was it a buy? Should we go there again? A buy, right? Okay, good. A buy,
Yes.
okay. Okay, it's a buy. So now, okay, you now go there, you choose for 1 hour, you choose the time frame according to Manara has given you. So you've chosen GBP odd, choose 1 hour, then you now check the scanner. This time around, you're not looking for technical indicator, right? You are looking for pattern. You're not scalping. If you're scalping is where you use this one. Do you get my point? So you click on the bats. The bat pattern is the pattern that is shown there over there. Now, for those of you who started this class with me, remember I talked about why Manara is better. The Manara gives you risk to reward 1 to 3.
Yeah.
Look at the risk to reward here. So it means if you are using $10, you should be expecting to make $32 from this trade. I mean, that's like times 3 or whatever it is you are risking. All right. But anyways, so you have, when you click the scanner, it shows you the bats for a buy. Okay. You click on show. When you click on show, what do? You now tap the scanner again so it can disappear. And then you can have the parameters here spelled out. Okay. And I told us that what is the first thing we want to look out for? If it's a buy, we want to be sure whether it's going up or down. And as we can confirm, what is this? It's going up, right? From here up to this place, right? Good uptrend.
Yes.
Why? Because we have, let me show you why again. Another reason. At least so I'm doing all those details so you understand. This is a low, this is a high, this is a higher low, this is a higher high, a higher low, a higher high, like that, right? So it's confirmed that is an uptrend. So a buy is not out of place. Now the next thing you want to confirm is Manara entry. Remember the list I gave you, Manara entry. So where's the Manara entry now, guys? This is the Manara entry, right? This is the Manara entry. So look at the Manara entry. So what do you do now at Manara entry? Now you come to the tools here. Can you all see the tools here? Look at the tool here. This area, you come to this one, this particular one. You tap on it, you see horizontal array. You can choose horizontal array or when you see the horizontal line, but this is horizontal array, let's just choose it. So you put that line on the same area where you have the entry, Manara entry. Now when you have that, what do you want to do? That line, you drag it further. See, you drag it further. You want to trace it down to see if there's any institutional candle around this area. Okay? Wow. Is there institutional candle around this area? Can somebody tell me? Look at this. This is Manara entry.
Yes.
Remember?
Yes.
You guys are
Okay.
smart. You guys are smart. I'm happy. You are in my class. You guys are smart. There is, look at the line. This is the entry I extended here. There is. And what is where is it? Where is it? Let's look for it. Already, we have seen it already. Just let's point it out. I know you guys are making my class so easy this time around. Whatever it is you took this night, please make sure you take it every time. Just note it. I mean, this is not like this class. So look at this institutional candle here. A small red candle followed by a green candle
That's
and about 1, 2, 3
1, 2, 3
confirmed. So we have the first thing confirmed, which is what the trend is confirmed. Manara entry confirmed. The third one is confirmed. IC candle is there. So you put the line like this. Okay. So what you do now is the line should be around here. You now put. So what you do is This white line will become your Manara entry. You now put another line. Choose another line again to show. I'll tell you why you need to do that, to show the IC candle area. Now the IC candle area is here, but that one too is also IC candle area because the wick, isn't it? So you see now making two lines, right? What's the third one? 88%. Hey, this is the part that is technical, and I want you guys to pay very good attention. It's so easy, don't worry. It's not going to be too difficult if you pay attention, okay? I mean, after all, you have to give me all your attention now. I mean, I'll return it at the end of this event, okay? Or this session. I'll return it to you. All right. So now we have the first line, Manara entry, second line, institutional candle. They are in the same zone. Now, the last thing now I want to check is 88%. What is 88% Fibonacci? What is Fibonacci? It is a tool that is used in measuring the market such that it tells you it helps you to predict the next areas the market will get to. So it helps to choose areas of reversal in the market. Now, the history of Fibonacci, you can go and watch it on YouTube and all that. You don't even need the history, just know the measurement you are looking for. Now, guys, pay attention there. I want to show you something. So you click on this part for you to look for the Fibonacci. Okay, you come to this area, this one. Now, when you tap on it, you look for Fibonacci. Oh, sorry, not here, not here. Sorry, not there. Disappear, man. Not here. Oh, come on, man. Why are they appearing? What things I don't need are just coming up. All right, what we are looking for is around here. This one. Let me show you. Here. It's here. The fork-like symbol here. When you tap on it, you see the Fibonacci trend, Fibonacci retracement. This is it. Can you see it, guys? Can you see it?
Yes, sir.
Yes.
So you can favorite. You can even favorite it, so you can easily see it. Favorite. All right. Now you tap on it, Fibonacci. So when you tap on it, now these are Fibonacci works. You use it to measure. But when you're measuring, if it's a buy, you are measuring. You start from the bottom of where you want to measure, the beginning of that line. You see it? I put it under the line that went up, okay, to the top. So you start from the bottom, you tap it, and you drag it like this to the top. If it's a sell, you tap it from the top to the down, okay? Now, but there's something I want to help you out with. Now, there's a setting that you must use to make it less complicated for you, okay? Now, so what you do now is, thank God you see this video later on, you just learn what I did there. Also, you can screenshot. So what we'll do now is we go there to put the settings so it can be simple. I mean, this is not the setting you want. This is the default settings. It has too many things there. Just want the very simple one. So you tap on it, as I've done now. Look at that, tap on it. Okay, when you tap on it, sorry, you double tap on it, I think. Yeah, double tap on it. It will bring out these settings. Okay, so of all these settings, you don't need most of them. You don't need this one. You see, I'm unticking that one. Untick this one. Untick this one for Manara purpose. Okay, untick this one. You can leave this. You're not looking for. Okay, let me see. Okay, untick this one. Okay, so you have 0, you have 786, you have 1. Then this one that is 2.618, change it to 0.88. That's 0.88. Okay, then you remove the 3.64.2, you remove all of them. So if you look at it now, we have only how many that I left there? I have the 0, I have the 786, I have 1, I have 0.88. That's all. That's not all. Now, apart from the figures, now the all those ones that you have removed, another thing you need to remove is you need to remove the background. Look at the background here, below here. You tap it off, you take it off. You don't need the background. That's it. You change the background, remove it. So you move the background, there will be background color. Another thing is you tap on percent, use percent, okay? Use percent. Don't use, okay, you can leave the prices there and percent. Tap on percent to add percent to it, okay? Now, another thing you want to do, because of the for visual purpose, I mean, so you can see clearly, okay, because the background is dark. So you'll be asking yourself, what color would you like? What color could you like for these figures? So you can see them clearly. That will not sink in the black. Like the one piece, the one now, which is like 100. I mean, the background is dark. So if you have this kind of color, it's not good. So you may want to change it. Okay. You may want to change it something different, something you feel you can see. So let's take magenta. Magenta. Okay. Let's use the 78 for maybe something like, ladies, help me out now. Red. Fire red. This color now, we can use this one for yellow. The 88%, let's use white. White, so they can come out from the background. And then the thickness, I think the thickness, let's make it thicker. Let's make it thicker, a bit thicker, so it can really show. All right, so whatever I've done here now, you can always check it out in the, what's it called? In the video later on, but you can screenshot this part. Now let me just give you some time to screenshot these settings. So when you check your own, you can use it as a yardstick. Okay, have you done that? Screenshot, guys. On the screenshot.
Yes, sir.
All right, good. So let's assume you've done that.
I'll post it in the group.
Okay, good. So I'll click OK. Then you click OK. Now when you click OK, look at it now. Everything can be seen. So I'm going to start again. Let me delete it this time around and start again. Now that you've done it, it will be there showing, waiting for you. So remember, before I go on now, I want to remind you again. So if you are measuring this, okay, if you want to measure, okay, you're going to measure it. Oh, okay. So if you are measuring, sorry guys. All right. So if I'm measuring, how do you measure the Fibonacci again? Let me show you where you measure. You follow the pattern. The pattern starts from X. Can you see it? X to A to C to D. Do you understand? So if you are doing your Fibonacci must start from the points X and A. So if you are selling, you put your Fibonacci on A, tap it, and drag it downwards to X. If you are buying, you put your Fibonacci on X, you drag it upward to A. Do you understand that?
Yes, coach.
Yes, sir.
Sir.
All right, good. So now that you understand, so we are buying. So I'll put my Fibonacci to, see the line here. Can you see the line? You bring it to X area, which is the beginning of the trend. I tap it down and I drag it upward to A. Then I've done that. Now what am I looking for? I'm looking for 88%. 88%. I want the 88% to be around the entry of Manara. Guys, can you see the 88%? Let me show you the 88%. This is a very good trade because it meets all the criteria. Look at the 88%. Can you see it? Can you see 88% Fibonacci?
Yes, sir.
This is the line.
Yes.
So what you do again, you bring another line from here to symbolize the 88%. You bring it here, put it on the 88% area, that line of 88%, drop it here, fine. Then you delete the Fibonacci so you won't be having too much around this stuff. Can now delete the Fibonacci now, okay? So what am I doing now? I'm going to delete the Fibonacci. Now the Fibonacci is off. Now look at this. What do you have here? You have number one, you have the Manara entry is exactly around the 88%. Can you see it? The first line here. Look at this first line. Is the 88% line. Is on the Manara entry exactly. The IC candle
Yes.
is a little bit closer to the Manara entry. Isn't it?
Yes.
Right? Okay. And then what's this entry again? What's this one? Can you guys remind me?
Which one?
88%. I have how many white lines here? This one is the institutional. Okay. Okay, let me see. Okay, sorry, this is the institutional candle. This is the institutional candle. This is the, okay, so the institutional candle. Let me delete this one. Mistake. So we have the institutional candle line. We have the Manara entry line. We have the 88% of Manara line, and we have the institutional candle close to it. Do you know what this means, guys? So if you are taking these trades, look at it. If you are taking this trade, guys, you see this line here, the IC candle line, which is here. Are we together?
Yes, sir.
Yes, coach.
So you divide your risk into two. You put one here for a buy limit at the IC candle area, and you put one at Manara entry. Why? Because two of the confirmation falls on Manara entry exactly, which is number one confirmation Manara entry, number two confirmation the 88% they fall on the same Manara entry. While one falls a little below Manara entry before the stop loss. So long the three confirmations falls around the entry area before the stop loss, that trade idea is valid. So how you now do it is you can split it into two. You can split your risk into two. Put one buy limit at the area of the IC candle or the 88%, and put the other one on Manara entry. Do you get my point? That trade will come to your entry and pick you, and probably go to profit. And when it goes to profit, it will also always most times hit the target. This will give you accuracy of like 90%. Do you understand, guys?
Yes, sir.
Coach, I'm confused though.
Where are you
Me too.
confused?
This
Quickly.
these three places you say that we should take the buy from Manara entry, Fibonacci entry. That's institutional candle entry and the stop
Yes,
loss stuff.
so what I'm saying is this, whenever you do these three confirmations, what are the three confirmations again? Another entry, that one is already there. That one is there before you even came, right? The two entries you
Yes,
add to it
yes,
is the institutional candle, which is this one. Can you see the institutional candle? Can you all see it?
yes.
The line here, and then the other one, 88%. So now, when the three of them are aligned, okay, now out of the three now, and I said, well, the remaining three of them are aligned is a good trade. But then I said, this one now, look at it, the 88% is exactly on the entry of Manara.
Manara.
Do you get my point? It's
Yes.
exactly on the entry of Manara. So that means you take one position for entry of Manara, and you take another position for entry, or for this entry for the 88% that is below here. Sorry, the IC candle. Just look at the IC candle is below now. Can you see it?
Yes, it's below
So
Manara entry a little.
Yes.
good. So that one will help you. So in a way that in case the market comes to the IC candle before going up, it will take one for you here, and then you take the other one for you. Then in case it only touched only the Manara entry and the 88%, it will still pitch you in the trade. At least you'll be there either way. It's just like, do you get my
Okay.
point now?
Yes.
Let's take one more example. The last one, they will call it a night. Is it okay for us to take one more example, or we'll call it a night already? Because it's late.
No, let's
Another
One more
example, sir.
example.
another
Okay,
example,
all right.
please.
All right. Let's go to monitor again. Still on mature. Let's check USD CHF. Is a buy for 1 hour. USD CHF a buy for 1 hour. Okay, is a buy for 1 hour. Can we guys see? Can we see it now? So let's go to chat to go and type it in, so we can see it clearly. You know that place is short. That's if you are using a mobile phone. Even if you are using a laptop, you still need to come here and do it so you can see it says USD CHF. You choose Oanda as usual. Time frame 1 hour. Okay. Now it is a buy, right? So you click on the scanner to look for it. Can you see? Is this still a buy? I mean, the pattern is not showing it again. So, okay. Anyway, the market is already closing. The market has closed. So that's why it's not showing the pattern for now, I guess. It's not showing the pattern for now, but let's assume the pattern is showing. But we will not know, because without the pattern, we'll be able to choose the entry. Do you get? Or let me go back. Let's go back and see the entry here. The market has closed, that's why. Now, and it's 1 hour. So let's check Euro USD. Euro USD, Euro USD, Euro USD. Okay, Euro USD is 1 hour and it's a sell, right? Let's check that. Euro USD sell for 1 hour. Euro USD sell for 1 hour. Euro USD sell for 1 hour. Rwanda. Oh, sorry, I didn't remove this one. It's okay. It's not okay. Let me just remove it once and for all. Let me remove this one first of all. USD. USD. Where is Rwanda? Rwanda. Okay, Rwanda is here. 1 hour is 1 hour, right? So the first thing you want to check is, let's check the pattern. Is it an uptrend, right? Is it confirmed? An uptrend, right?
Yes.
Okay, good. So let's check this scanner if this one's still okay. So this is it. USD is sell for a bat. So you choose it. Is here already? Okay, now we have checked the trend. We know the trend. Next thing what is to check Manara entry. Manara entry is here. Okay, so let's put a line at the Manara entry again. So we can be able to trace it down. There's a line at the Manara entry. Okay. And want to extend it a little bit. Okay, it's extended, well extended. Now, what is the next thing we are looking for? We are looking for institutional candle around that area, around that entry area. There must be an institutional candle around that entry area. Now, remember, it's a sell. So, institutional candle that we see here is somewhere here. Can we see it here? So, for us, for me, okay, forgive me. There's an institutional candle here. Can we see it? Can we see an institutional candle?
Yeah.
Look at it here. After this green, there's a longer green, and then there are about 2 to 3 green, red. Sorry, there's a longer red, and then 2, 3. So institutional candle is here. So you put a line for institutional candle between the, is the, I told you the bottom of the green, right? So that's the institutional candle area, right? So
Okay.
it's close to the entry, making the third confirmation correct. The fourth one now, which is the last one, is Fibonacci. And remember the rule. What's the rule now? If it's the sell, you start from the X downward to A. If it's the buy, you start from A upward to buy. So I take it here. So since it's a sell, I start from the X area, and then I drag it down. Remember, I've changed the parameter, so it's easy for me now. So drag it down here. What are we looking for? We're looking for 88%. Where is the 88%? Wow, this is another beautiful trade. Look at the 88%. Can you guys see it? It's even around the entry. The IC candle around the entry. So you take this trade, guys. Take this trade with your eyes closed. I mean, open your eyes so you enter your stop loss well. And your lot size. That's the figure of speech. So I've deleted my Fibonacci, and I have a beautiful entry here. Why? Because number one is an uptrend. Number two, the Manara entry. Number three, the IC candle is there. Number four, the 88%, they are all of the same area. So if you're taking this kind of trade, if you look at it, where is it arranged? The first thing is, the first entry there is the IC candle entry, which it has touched already. It went further to pick. Hey, you see what I'm telling you now? Why it's good to take at least 2 entries. So the first entry is this line, which is the IC candle entry. It touched it. If you look at the market, got there, then still went further to touch the Manara entry, the main entry, and then the 88%, and now it's coming. Then also, okay, yeah, it was coming down. It got down to this place. Now it's coming up again to touch them again. It's still around the entry. Take this trade, you make money from it. You see it now. I mean, do you know one thing? Let me tell you one beautiful thing about what we are doing now. If you check all the trades like that, you see it now. You see that at least even if, let me just see this one, even if you enter this trade and he gave you like even 16 pips, all these pips and all that. Look at TP1 already, 20 pips. I mean, you'll be happy. You'll be happy. So the idea is it helps you to increase your win rate. It helps you to choose trades that will probably go has 90% chances of winning. Do you get my point? So with this one, I think we already know how to take our trade using these criteria. Okay, supposedly. Now, one last thing. Let me just try one thing before we call it a night. I mean, sorry for those who are already tired. I mean, but this is good for you. It's for your sake. I mean, you pay for your subscription. You want to be able to use this thing and that for testimonial for yourself, isn't it? So it's always good. What is worth doing is worth doing well. Isn't that what we're taught in school, right?
Yes, sir.
All right. So let's come to. I want to show you something. Let's calm down. See. Okay. Now let me go to notification. Let me just look for. I'm coming. I want to look for notification. Let me look for a trade that has happened in the past. Okay, let's look at this USD card, for example. Let me see if it's a win. I want to look for a trade that is a win. Okay, this one is still okay. This one is the stop loss. Use the stop loss. Let's look at let me check this BTC USD. BTC USD. Okay, BTC USD is doing well. Or is it? At least it's in profit somehow. Okay, so it's an uptrend, right? I mean, there is a buy. So let's check if it is truly an uptrend trade. Okay, it's an uptrend. It's an uptrend. Let's check. Let's check the entry area. Is there any IC candle around the entry area? Let's check. 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 Oh, okay. For me, this is not. There's no IC candle. There's no IC candle here. There's no IC candle. Can you see it? The red is longer, though there are three white soldiers, which is based on candle pattern, is right, you know. But that's not what we're looking for. We're looking for institutional candle, right? The red is big. I mean, if not for anything,
Yes.
I would say there's an institutional candle at the top for itself. And that is why, if you notice this price, when it got up to that area of TP1, it started coming down again, probably because of this institutional candle here for itself that is here. Look at the green candle that is smaller, followed by the red candle. But it's not institutional yet because there are no two other candles that follow, only one big long candle. But at least that's some
Yeah.
impact. So, but the good thing is, the first thing is an uptrend, right? Now, the second criteria is institutional candle. It didn't meet that one. Let's check whether it meets the 88%. Now, another thing I want to tell you is this. If you have two out of the three criteria, out of the four criteria, you have three out of the four criteria, it's still okay, but not, I mean, the best one is when you have four. But if you have those ones, still okay too. I forgot to tell you that. All right. In case you see maybe Isaac can do, you didn't see 88, but you see Manara entry and Isaac can do around the same area, or you see Isaac can do and Manara entry around the same area, you didn't see 88, or you see 88 and Isaac and Manara entry, you didn't see Isaac can do, you know, still okay, but not that great, but okay. All right, let's check. Remember the rule now from X. Sorry, guys, sorry. I mean, I can't use it now. Let me first. Let me. Okay, from X here. Okay, we will draw our Fibonacci from X area. Can you see it now? You know it's a buy, right? So we move from X to A. You move it up to A area and see the 88%. Okay, lovely. Let's see it. Guys, see? I think the 88% is confirmed. Okay. And that's why this trade is eating at least, you see it eating at least TP1. I mean, for BTC, TP1 is something big. So this is 88%, right? So let's delete the Fibonacci so we can see where it falls. Look at the 88%, it's falling at the entry exactly. This is a very good trade. That's why it's winning. Look at it. It got to TP1 already. So meaning it may even get to TP2 as well. I mean, this means if you have been in this trade because of your confirmation, you would have made how much? Yeah. You would have made 450 pips. My God. 0.1, you would have made $450 now. Do you see now? Guys, are you there?
Yes, sir. We can hear you.
Yes, sir.
Yes.
Do you see it now?
Yeah.
So despite so you see now, so this confirmation is a good thing. Okay. Now let's check one losing trade. I'm sorry, I'm taking your time, but it's all for good, you know. One losing trade. Let's go back to the USD card that hits stop loss. Now, don't get me wrong, like I told you from the beginning, I mean, okay, this USD card did not hit stop loss. Which one? I saw one that hit stop loss.
Yes.
Which of them? I think is this butterfly. I don't even like butterfly in the first place. I mean, in real life, I'll prefer a butterfly to a bat, too. But when it comes to me making money, I prefer a bat too. so, so before, so let's look for. Okay, let's just check this butterfly. I mean, I know it's only butterfly that will always eat stop loss. It has the tendency of that stop loss. Eh? Can you see the irony of life? And even okay, remember this is what supposed to be what a buy, right? Let's check the trend first of all. Let's check the trend. From the trend, you know that you are going to make mistake. Where is scattered, not giving. The giving is not enough. Can you see it now? Can you see why this thing is a losing trade? I mean, somehow scattered. I don't know. If you look at it from this left, it's like consolidation. Do you see it?
Yes, sir.
Yes.
Do you see it now? Consolidation. So it only came down here and then. So for me, we would have taken this trade in the first place. So there's we already have one reason why it should not be taken. Let's check the second reason again. Let's check if there's another reason again why it should not be taken. Let's see the Fibonacci first. Because this one I know can never have the IC. In fact, for the fact that the X is not on the same level, it's supposed to be a buy, right?
Yes.
Already you know that this one is not a good trade. Look at the 88% way above the entry. It's even close to the TP. Do you see it now, guys?
Yes.
This is what I'm showing you now. See the 88% is here now. That's the white line. Remember the white line on the Fibonacci is 88%. Can you see it? Can you see the white line? See it there?
Yes.
It's far away. You will know, sir, from the bending of that thing. The X
Okay.
is, So there are two reasons why you should not take this trade. Number one, the trend is not giving the good direction already, and the 88% is far away from it. So with those two on, the moment you have two that is off, you don't take the trade. Okay. So let's even check now. So even with this one already, the X is way above the entry. There's no way you will see a straight candle that is close to the entry area. Do you get my point? Do you get my point,
Yes.
guys?
Yes, sir.
Yes,
Look at it.
coach.
Let's even say we want to take institutional candle. How can you see this one is the same level? There's no institutional candle here. So you see why this trade is a losing trade. Now, but before now, you would have taken this trade. Oh, Manara sent me a trade, isn't it? But with this analysis, it helps you to know that this is not a good trade, and that was why it stop loss. Now, don't get me wrong. That doesn't mean even when everything is correct, sometimes you will not have losses. But I said it will give you 90% win rate, which means there will be 10%. I mean, even if remember I told you from the beginning, even if you have 40% win and 60% loss, so long you are following Manara risk to reward, you will never be in loss. Not talk of you having 80-90%. So guys, I believe with this viewpoint of mine, I've been able to convince you, but not to confuse you that Manara monitor and scalping scanner can help you make more money in the market with a very good risk to reward size. If you have any questions, you can post it on the group. And also, I'll send this video later on. I want to have a good night.
Thank you,
Thank
Coach.
you very
Have
much,
also,
sir.
Thank
bye,
you.
guys.
Good
Yeah,
night,
Thank you,
sir.
bye,
coach.
guys.
Thank you
Yeah,
so much,
bye.
sir.
Yeah, you're welcome. You're welcome, guys. All right, guys.
Let me go to bed now.